Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site live from Times Square, New York City, we have Brian Joyce, managing director on Nasdaq's market intelligence desk, for a review on technical levels to watch in Nasdaq 100. We'll take a look at a number of other markets as well. And Brian, I'm sure traders are happy to see the first half, second quarter of 2022 go. I mean, Nasdaq 100 down 30%. In fact, all the major averages down double digits. If we isolate the Nasdaq 100 on a 30-minute, give us some fresh levels to watch here.
So last week we spoke about how we were looking for a bit of a bounce. We came down to the 200-week moving average, came within 2% of it. We haven't come close to it outside of COVID lows 2020. It's been about 12 years since we got down to the 200-week. So we had about a 7.5% rally last week, but this week we've given back about two-thirds back from that. So no upside follow through this week. So where we stalled this week was at that price gap back from that Friday, June 10th, when we had the bad economic data that came out. We gapped lower. So the 12,083 to 12,267 range, to be precise, if you look at a 30-minute time frame like we are here, that's the key level in the very near term. We want to see the NDX get back above so we can see maybe we'll have some further upside follow through from there. And
let's take a look at what's happening in rates, because really what we're seeing in the equity market is predicated of what we're seeing, the impact of Fed policy, what's happening in the rate market.
Yeah, so the second quarter of this year, rates started the year at 1.5%. They're up almost 200 basis points at the high in June, which was 3.5%. So a phenomenal move, historic move higher. We have historic move as far as expectations goes with the Fed rate hikes. As many as 12 rate hikes were priced in as of earlier this month. So what we're seeing though is the breakout of that secular downtrend for over 40 years in this quarter, where we then broke above the 3% level. That's been a key level going back to 2003. Then it was low, and then more recent in the last 10 years, it's marked significant tops. So we did get back above that this quarter, up to 250 basis points, but we pulled back and we're now back below 3%. So that's, I think, a pretty key level to look to as a barometer going forward here in the third quarter. We've seen a lot of economic measures of inflation still remain very elevated, but we're seeing the market measures really come in. We're talking about 5 and 10-year break-evens, 5-year forwards. If we look at things like materials and commodities, they're really breaking down as well. Copper's down 25% off the highs. So typically when we see prices pull down like that, asset prices fall, such as commodities and copper, the expectation is that rates will come down with it. This time is definitely unique because we have the Fed is about to embark on its quantitative tightening program.
We haven't spoken about the yen trade. It's got to be a number of years. I mean, we've been so focused on the dollar and rates and what's happening in gold and what's happening in the Nasdaq 100. Explain to the audience why the yen trade is significant, what it signals, and the levels that you're looking at.
So the yen trade is significant right now because the problem with a lot of these developed countries is the amount of debt on their books, the debt to GDP, and Japan is right up there with the United States. Japan has a very aging population as well. What we're seeing here is a very long-term trend of the yen. The 124 level was a key price level where back in April, the yen broke out above. It's a 15-year resistance line. Now, most of the Western economies or developed economies in the world are raising rates. Japan is one of the few that aren't raising rates, and they're actually locking the long rates at 25 basis points. So their currency is really suffering because of that. It's down about 18% this year. That breakout above the 124 level is significant, and it carries with it a measured move from a technical point of view up to around 173, which from here would be about another 27% decline, and that's a minimum measured move. It could take a lot of time to get there, but the trend, in my eyes, looks like the dollar yen will trade high, which means the yen will depreciate.
Well, it's something we need to think about in the U.S. as well, because we are following the same demographic trend where we have a much larger aging population and we don't have the birth rate to keep up with that. And the significance of that is if you don't have younger people, that takes away from your tax revenue. So it's something that we need to think about, because that's exactly the trap that Japan is in now too, which is why they have nearly zero interest rates for that reason. But I want to wrap up here. I want to talk about Bitcoin. I know Bitcoin isn't reflective of the digital asset and the technology behind it, that kind of space. But if we're looking purely at price action here, just isolating that, what do the charts show?
So in early May, we put out a piece when Bitcoin was around the 32,000 level, highlighting the major support at 28,800. The reason why that was a big support level was because on the uptrend coming out of the COVID lows, there was a 10-week period where Bitcoin jumped about 200%, and below 28,800 was a very weak, wide price range of historical volume. So when there's very low volume across a wide price range, that makes that range very weak support. So we noted then that a break below 28.8 could potentially set up a move all the way down to about the 13,000 level. We thought 19,500 on the way down could be a temporary period of consolidation, a short-term or minor support level, simply because that was the prior high going back to 2017, which then was an all-time high for Bitcoin. So far, we've seen that. We've right now today and over the last 2 or 3 weeks been consolidating around that 19,500 level. If we close around here today or tomorrow, we'll have the lowest weekly close on this downtrend, and I think that potentially could open up the gates to a move lower towards 12,500, 13,000.
All right. On that note, let's wrap this up. Brian, thanks so much for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.